talk more about the markets and the way forward, now we have Gautam Duggad, who's the Head of Research Institutional Equities, and Motilal Oswal joining us. Very good afternoon to you, Gautam. And let's get your initial thoughts on the consumption booster announcements. Which sectors now do you think will be in focus going ahead now that you have the budget out of the way?
Yeah, so clearly there are two things which are happening. One is the government clearly recognizes the need to revive consumption, which has been lackluster for last 2-3 years. So they've given a tax cut to a very big segment of the population. So they've cut taxes for middle class, which is well understood by now. This will definitely augur well for consumption. I think the capex allocation is slightly more moderate, and which is why in the portfolios you will see shift away from capex towards consumption. So sectors like consumer durables, auto, consumer staples, consumer discretionary, I think they should perform well, which is what the shift you are seeing today in the markets too. Secondly, the finance minister has still managed to maintain the fiscal deficit target for 4.4% next year, which is slightly better than what the markets would have expected at about 4.5. So the path of fiscal consolidation continues. We had hit almost 9% fiscal deficit in FY21. So from there, we are talking about 4.5%, 4.4% in FY26. So in 5 years, we've reduced the fiscal deficit by half from the top. So, from an equity markets point of view, these are the two big picture takeaways, that fiscal consolidation continues, and at the margin, the government is moving towards reviving consumption and not putting all its eggs in the capex basket.
All right, Gautam, good to be speaking with you. Shrishti on the other side. But Gautam, talking about the capex announcements, because there were some hopes building on that the capex could be higher than what we have seen in the actual numbers for FY25. Yes, indeed, that did pan out. But disappointment coming in from some of the key sectors, Gautam, from the likes of defense, railways, even infra. What is your take on that? How big a disappointment this could be in the times going ahead as well, and how will the market participants will take it?
Yeah, looks like, because see, both for railways and roads, the allocations are absolutely flat. The defense allocations is marginally higher, and at the same time, the subsidies that the government allocates, that number has also been kept flattish at 4.3 trillion rupees. So, budget is always a balancing exercise. So if you have to, provide some leeway to one segment of the population, then the ability of the finance minister to sort of balance that budget get constrained on the other side. And at the same time, you still have to, stick to the 4.5% glide path that they had articulated in the last budget. So keeping all of this in mind, it's quite natural that the allocations for the capex side are slightly lesser than what the markets might have wanted. So that's why you're seeing a reaction in some of these stocks, railway, roads, defense. So basically, capex will remain in a slightly moderate lane in the near term, and people who've been underweight on staples, on discretionaries, I think there you might see some rejigging in portfolios happening now.
And lastly, Gautam, how can I not ask you this question now? Post the union budget, it's out of the way. Where do you find value in the markets now? Where can one actually look to hunt?
So definitely we see value in large caps. We still don't see value in mid caps and small caps. They're very expensive despite the recent correction. So in our model portfolios, we had shifted towards large cap way back in July. So 76% of our model portfolio is in large caps. And within large caps, our overweight is residing in IT, PSU banks, pharmaceuticals, then consumer discretionary and real estate, right? We are also marginally overweight on telecom too, right? At the moment, we are also overweight on industrials, which we might have to rethink now, given the change in the government's priorities. We'll see through that. But at the moment, this is how we are positioned in the model portfolio. We see value in large cap financials clearly. We see value even in some of the pharma names, IT names selectively. So that's how we right now stand at on portfolio side.
All right, Gautam, with this, we let you go on that. Really appreciate you taking the time out and speaking with us.